We have Marco Papic, Chief Strategist at BCA Research, joining us to talk to us about markets. Marco, great to have you with us here. Thank you very much. Appreciate it. So let's just start with that 3% drop in the price of oil that we've seen. That Washington Post report, which kind of has lowered tensions a little bit. What do you make of it? And do you think the drop is going to endure? Or should we be prepared for the eventual strike, which will come, and then the markets will react? What's the sense?
Well, I think one thing that has changed over the past 12 months has nothing to do really with geopolitics. It's the macro context. And what I mean by that is that the Fed is front-loading quite a bit of cuts, and China has hinted at some fiscal support for its economy, although it hasn't really given us much to work with. So the reason I start with this is that if you look at price action for oil over the last 12 months, almost every time there was a geopolitically induced rise in prices, it was really an opportunity to fade, to short the increase. However, I think that the Fed and Beijing actions over the past several weeks do create more of a sustainable, bullish environment for oil over the next 3 to 6 months. And so that's the first issue. The second issue is your point about geopolitics itself. I do think it's getting a little bit more complicated. First of all, the US election will end, in 3 weeks, or at least I guess we hope so. And the reason that that's important is because no matter who wins the US election, they're going to have to deal with the fact that Iran's stockpile of highly enriched uranium is double what it was in 2011 when the US threatened to attack Iran. So forget Israel for a second, forget war between Israel, Hamas, and Hezbollah. Even if there had never been that October 7 Hamas attack against Israel, we would still be talking about what happens to the Iran-US relationship after the election. And I think that also supports oil prices a little bit more sustainably than what's happened over the last 12 months.
Yeah, absolutely. Take that point, Marco. We have a lot going on, and with U.S. elections, it's really going down to the wire, right? By the way, guys, I don't know if you saw Kamala Harris releasing a plan for black men in America, something called forgivable loans, where I don't know if that really means that there'll be a waiver on interest, but some kind of sort of big plan to bring in the that segment of the population and to sort of swing those votes specifically targeted at black men. And they're looking at maybe she went ahead to talk about making perhaps cannabis illegal, legalizing marijuana. So yeah, it's all going on in the U.S. election. Take that point, Marco. Let's talk markets. So given that we live in a very, very conflicted and very complex world right now, in terms of market bets, what would your key longs be? Between, let's say, oil or U.S. equities, emerging market equities, what are you trading long right now?
Well, what I would say is that I really like the setup for Japanese equities. I also think that European equities could outperform the US over the next 12 months. Generally speaking, I'm much more constructive on risk than I think many other investors, even with S&P 500 approaching 6,000. The one risk, however, in the US is that if Donald Trump wins the election, there is a chance that the bond market reacts negatively, which could create some indigestion right after the election. Now this happened in 2016, but nobody remembers it. Bonds actually sold off pretty aggressively, but US equities did extremely well. But that's because it was 2016. The world needed growth, the world needed inflation, and so bonds and equities were negatively correlated at the time. In 2024, I'm not sure that the world needs either more growth or more inflation. And so the risk of a Trump presidency, because it's accompanied with this pretty clear control of Congress, would be that the bond market could have some indigestion. So investors should seek some safety in non-US equities.
Interesting. Hi, Marco. Good morning and good to see you in. Nigel on this side. Marco, what about emerging markets, and particularly a market like India? You've given us a brief take on China and how things are shaping up out there. But India has been the big outperformer, political stability, earnings growth as well. But valuations have been a bit of a headwind. What kind of allocation do you think comes to India?
Well, I think in absolute terms, India can do well as well. The valuation is an issue, and it's not really a problem when the cheaper segments of emerging markets are doing poorly. Then you just buy what's expensive because it's value. It's expensive for a reason, as people would say. But when you start seeing a little bit of movement in the rest of the world in terms of stimulus or policy changes, that's when valuation becomes a problem. And so that's why what happens in Beijing is more important to India than almost anything that happens in India. And what I mean by that is that if the fiscal policy rumors are true, I mean, and if Chinese policymakers actually do something about it, Chinese stock is just priced for imperfection. In other words, policymakers don't have to come out with a clear, perfect plan. They're just so cheap that almost anything will set that flame afire. Whereas India is priced for perfection, continued perfection, and that's more of a difficult, story to continue. And so I think a lot of global allocators might start looking to trim their exposure to India and pick up some of that value in China.
No, absolutely. Got that. By the way, the latest sort of betting odds show that Trump is ahead once again, right? I mean, the momentum has shifted back to him.
Yes, absolutely. Well, in fact, the whole point that Kamala Harris, who is an African American woman, is, this late in her campaign proposing an economic plan for African American men suggests that there is a little bit of a panic in the Democratic Party with some key constituencies that tend to vote for Democrats. And so, we already know this. This is public information from the polls that Kamala Harris is doing pretty poorly with some of those key demographics. And so it's really revealing a level of concern. And the reason for that is that if you look at the swing state polls, both of the candidates are pretty much tied neck and neck, in almost every swing state. The problem is that both Clinton in 2016 and Biden in 2020 had a pretty robust lead on Trump in those swing states. Of course, that didn't help Clinton. But the point that I'm making is that Harris has no slack in the swing states. And that's been the case for a long time. It's been the case for a month and a half now. And without slack, it's not clear to me how Harris can really pull out a victory. So yeah, I would agree with some of the betting markets. It's not a high conviction view. I mean, they are still pretty much in a statistical tie in national polls. Harris is actually much higher there than in the swing states. So it is a close election, but I would say that Trump probably deserves a 55-60% probability at this point in the race.
All right. And 20 days to go, right? 22 days to go to the US election. Marco, great to have you with us here. Thank you very much for your time. It's always a pleasure, and looking forward to our next conversation. What will